Welcome to The Real Money Show, the number 18778 Silver, and the website guildhallwealth.com. If you've never acquired physical gold and silver, you're going to want to listen to this show. Now might be the time to really strongly consider doing that. My name is Jeremy Wiseman. I'm joined by Jerry Correia, and as you're listening to the show, if you want to get more information, just go to guildhallwealth.com or call the number 18778 Silver, and you are on your way to getting involved in the gold and silver market. This week on the show, we're going to be talking about the week that was, some amazing forecasts in the market. We're going to talk about the super turning. Is that what it's called? The supercycle, I should say. The supercycle, and also how to cure some of Canada's major financial problems. And we'll see how it goes. But first, Jerry, this week, gold fell $164. It was a 4.9% drop in the market. But before anyone panics, let's not forget that gold is up 24% year to date. And we started the year off at $2,550, and we are trading much higher than that. Silver, on the other hand, didn't move much at all. We barely budged. We fell about 60 cents from the near highs of recent highs of $33. So, you always have to wonder what's going on, question the fundamentals. Is the bull market over, or is this just traders doing trader things? Mm-hmm. So I was looking at some stuff this week. I found it really interesting. Alan Hibbard, he is the lead analyst over at goldsilver.com, and he wrote just last month that he believes silver is headed to $40 this year, and that it will break $50 in 2026. And he is looking for those reasons to be booming industrial demand, obviously solar powers, EVs. There's a lot of talk about self-driving cars. Technology's only continuing to grow. Of course, that leads to record usage, and this is coming from the forecast by the Silver Institute, which has also talked about 5th straight years of supply deficits. So that's a huge, huge factor. It's not just the demand side, it's the fact that there's no supply side. Mm-hmm. So demand is rising, supply is extremely limited, there's very little investment into the mining sector. And then you also have safe haven buying due to trade and inflation risks, which could be part of the reason why the market came off a little bit this week with some trade easing, perhaps. Mm-hmm. And then, of course, one of the biggest ones is the technical breakout, the fact that, as you have noted on this show before, and anyone new to the show, there's a chart analyst thing that you look at called the cup and handle. And right now we are at the edge of the handle. Is that correct?
It's a tasty cup of tea.
What do you make, first off, of Hibbard's call for $50 silver within the next year?
Very much supported, and I do support that call. That's Mike Maloney's guy, the gold silver. Mm-hmm. Yeah, they were actually further their analysis. So that was this year, $40, but they have a case for, I believe the number was $400 or $500 silver. So the case is still on because the fundamentals, the charts all agree. The 80-year socioeconomic cycle points to that as well. We'll talk about that in the next segment, but fully in support of that. And, going, kind of rewinding to the week that was, everyone had questions about pullbacks. And it had to do mostly with the U.S.-China agreement to the 90-day truce, the tariff pause. So it's 90 days, very short term.
And trade deals, making more trade deals. So there's less uncertainty this week than there was the week before.
Yeah, so it was just that. It helped boost the sentiment, which helped the share markets. We saw an unwinding of the safe haven trade. So that was definitely just traders trading. It was not physical gold and silver being sold off, folks. This is paper futures contracts that just simply get dumped. Their safe haven trade gets unwound because money can flow back into the share market. So they struck a temporary trade deal slashing tariffs for 90 days. U.S. tariffs on Chinese goods will drop from 145% to 30%. And Treasury Secretary Scott Bessent called the agreement finalized during their talks in Switzerland a major step forward. The deal also includes joint efforts to tackle the fentanyl crisis, and that's just remembering the tariffs that are in Canada and why we have tariffs here in Canada. There's a lot of focus on the fentanyl issue, but a lot of deals this week.
A lot of deals. Let's stay on the topic of gold and silver forecasts, because as much as you're looking at gold dips, there are not just the forecasts we're mentioning here, but a super cycle as well, which we're going to talk about later in the show. The next one I wanted to mention was I was listening to YouTube. Charlotte McLeod interviewed Gary Savage, and he's a newsletter analyst since 2007. He's mainly focused on precious metals these days, and he's calling for, you ready? $10,000 gold by 2027. He says maybe even 20,000 if it goes parabolic. And he says why? Basically, he's looking at in 2024, gold broke out of a 13-year base and ended cartel manipulation. I think we got confirmation of that this year when you started to see all of the gold coming back into the U.S. From beyond. He believes that despite dips in the market, that there is a short squeeze underway, and near-term dip are expected. But he believes that by late 2025, we're going to be looking at a gold price of $4,000 to $4,500, and in silver, we were just talking about Mike Maloney. He just did a video talking about 300 silver and saying, look, it's not out of the realm of possibility. I truly believe that once you break 50, you're now into price discovery, and people can now be more creative and start to really think about value and what silver could truly be worth, as opposed to just a hard target of let's get to $52. That's the all-time high, right? So once you break that barrier, he believes silver $100 is a piece of cake, quote, and that by 2029, within 4 years, silver could be trading as much as $500 an ounce. I think either way you break it down, I always break it down to clients, Jerry, as, okay, there's la-la talk, there's sort of reality talk, and then there's what we could yard by yard get to within the next year type of thing, right? And I think that, sure, you could say $500 is la talk over the next 4 years. The question is okay, what if he's half right? What if he's a quarter right? What about silver going to $100 within the next 4 years?
We still want to be on that silver train.
Why wouldn't you want some of your holdings in a precious metal? Obviously not all of it. But if you're thinking about 10, 15% and you're looking at silver today at 33 or gold, around, what is it, $3,200 an ounce after a 5% pullback, why not consider an entry level at this point? The number 18778 silver, the website guildhallwealth.com. Jerry, before we jump into more conversation here, I wanted to throw one more at you.
Please do.
Okay.
I'm ready, I think.
Mike McGlone over at Bloomberg Intelligence. He's a veteran commodity strategist. As we said, la talk, being more conservative. He has a bit more of a measured approach. And yet he's still predicting $7,000 gold by 2025, by the end of 2025. That is a huge jump driven by safe haven demand, central bank buying, Fed policy shifts. So maybe this could be a combination, a perfect storm of Basel III rules coming into play. And by the way, I know we've mentioned them a lot on the show. They're not our friends. We're just mentioning the fact that they're making gold a tier one asset, something that has always been. So don't reframe this into a narrative that's not true. They're just going back, which is nice to see.
Exactly.
And I like that whole overall theme of going back. But also, hey, maybe the Fed does lower rates. Maybe so between lowering rates, Basel III rules, additional safe haven demand, who knows? Could the price drive to 7,000 by the end of 2025? Jerry?
Yeah, absolutely. These are all strong fundamentals, trends that we do follow. We're observing them. We can witness, we see, we've been following for a very long time. And these are this is what happens when you look at the previous cycles in gold over the last 50 years. There's been two clear super cycles. We are currently in the third that Jim Rickards talks about, where the two previous cycles gained in just 10 years 1,400% from bottom to top, and the third cycle that we are in right now began in 2016. So if it's a 10-year cycle, by 2026 we should have some serious fireworks, where with this particular cycle that we're in coincides with a $14,000 move for gold. And that's coming from Jim Rickards, who is a respected economist and author of many great works. And that's just another one that, again, echo the sentiments of not just Westerners, but people from around the world.
Yeah, I think it's important to consider that gold is real money. It is a store of value. It's not a currency like a unit of account. So a lot of people will say, well, how do I spend my gold? It's not really about using it as a currency. It's about protecting your wealth. And at the end of the day, over the last 5 years, it's up well over 100%. That is protection against inflation. And that's a rebate against the taxation you've been experiencing.
Yeah, it's protection against the currency debasement. Paper money is simply just losing buying power. Your savings, your hard-earned dollars are dwindling as a result of failed economic and fiscal policies. You just expand currency supply. This spells weakening dollar and weakening savings for you and your family. So physical precious metals ownership escapes this. It provides protection against inflation and performs during times of stagflation and recessions.
Coming up in the next segment, we've got people we speak to every day. They're getting 5, 6, 7% return. Is that enough? Should you be impressed? Let's dig into that. The number 18778-SILVER, the website guildhallwealth.com. If you're not holding real money yet, this is the moment to act. Analysts are talking about big gains. And they're talking about owning real things, and the next moves could be higher and higher. You don't want to miss out. The timing is on your side. We are new to this bull market. And if you've never purchased precious metals, consider going to our website at guildhallpreciousmetals.com. It's our e-store. You could set alerts. You can pick up an ounce of gold, a tube of silver maples. I find it's really competitive in pricing overall, so definitely check it out. And also, we tend to carry a lot of stuff that other companies seem to be out of stock on. So definitely check out guildhallpreciousmetals.com. And if you're looking to store physical metal in a registered account, we'd be happy to show you how to do that. Fully allocated, fully segregated. You own the product. Go and visit it. Personally audit your holdings. But guess what? It's held outside of the banking system. Jerry, last week, we were talking about that the government of Canada, and you've mentioned this, that in 2020 they borrowed $500 billion. And now we owe $20 billion in interest on that. And I wanted to take that a bit further because I saw Pierre Poilievre mention that we're paying out $1 billion a week in interest. And I looked it up, and it's pretty close. It's about $47 billion annually in interest payments. And the question is why? All week on X, I've been seeing all of these people starting to look for solutions. How do we fix the problems in Canada? And I keep wanting to say the same thing over and over and over again, and here's how you fix it. Pre-1974, the government of Canada would issue a bond to the Bank of Canada, and the Bank of Canada would give them the money. The interest would be paid to the Bank of Canada, and any gains done at the Bank of Canada goes back to the coffers of Canada, the government of Canada. So you're basically paying interest to yourself.
To yourself, right. Back and forth.
That is not how it works today. Today, what happens is the government issues the bond to the Bank of Canada, and the Bank of Canada becomes an agent, a broker, and goes out into the world
tendering
and says, hey, Brookfield, do you want to buy a Canadian bond? Hey, BMO, do you want to buy a bond? Hey, Manulife, do you want to buy a bond? Who wants to buy a bond? Everyone gets a bond.
A AA- bond.
Now, here's what happens. You speak to your advisor, God bless, and they say to you, you made 6% minus managing costs, And isn't that wonderful? And you say, well, that's pretty good. What was I invested in? And say, oh, well, we got Canadian bonds. 20% or 10% is, I don't know, you would probably know the percentages more, Jerry. And you just go, how ridiculous. So your gains as an investor of 6% come at a cost
as a result of
$47 billion a year in interest payments. What does that mean? That means, by the way, one hospital costs $1 billion to make. Mm-hmm. That's 47 hospitals. I saw just this morning someone said, well, if you lower taxes, we won't have free health care.
Oh, yeah.
Oh, yeah? How about stop this madness? Mm-hmm. Stop paying interest on loans that you were getting for free
exactly
45 years ago, right? It's an abomination. Mm-hmm. The fact is they could go back to that right now, and we could get rid of these interest payments. Just let them all roll over. But instead, you're happy with your 6-7% returns. Meanwhile, it's coming at a cost of higher taxes, higher inflation, lower
standard of living,
lower standard of living, and no safety net.
Exactly.
Right? Have you been to a hospital lately?
We need more of those.
You see what I'm saying?
Exactly.
So nothing's free. There's nothing free. So that's my spiel here. They need to go back to that. And also they should go back to what I call the Great Canadian Gold Reserve. Mm-hmm. It would take 5 years to get 1,000 tons, 100 tons out of the earth through mining, royalties going to them. You don't have to nationalize. You say, hey, we're going to buy from you. Go to the market for another $100 billion. They have the money.
Yeah.
They can spend the money. You don't have to spend $12 million to women's issues in Guam. You can actually buy gold instead, which would be better for Canadians.
Right.
And the Canadians who own 100 tons right now, they should be doubling up, because if it goes to $6,000 an ounce, that's going to be incredible political clout.
Right.
That is new businesses. That is political clout. That's taxes to the government that they can then spend on whatever they want. Who cares?
Mm-hmm. Your solution is very simple. It happens within 5 years. You crank up the mining. You shore up. You start stockpiling the resources like other countries are doing right now. But it actually exposes how overcommitted Canada has become towards corporations, financialization, paper. And when you're committed that far, you're pretty much finished. It's a sign that Canada is in desperate trouble, and we need some saving. We need to do something dramatic for ourselves first and foremost, because we right now are financing this. And in my solution, the way I see it is we are financing this. Yeah. Every single dollar that you have in the bank, it is a fraction reserve system, or even probably a zero fraction reserve system. They could probably borrow from all of our deposits to finance whatever they need, all of those obligations. It's a big pyramid scheme, it sounds like, and that's what it seems like. When you have me paying the person at the top, the Ponzi systems usually fail, and that's what we've become here in Canada. And it comes from a paper from the C.D. Howe Institute that called the unfunded liability of our pension systems a huge Ponzi scheme. We need more and more workers to pay the boomers, but we don't have enough workers anymore. You cited the healthcare system. How many healthcare workers have fled?
I question that. Like, you could say we don't have the workers, but
we do.
You can attract workers. You don't have to get migrant workers. Like I was thinking about this.
Wages,
right. It's like you could get migrant workers, and the government subsidizes you, and you pay less for them, but you are destroying your business. There was I had a client this week. They were talking. They said they work at Elections Canada. He said, "Look, what do they call it?"
Please share. Where are you going with this?
He was saying it's not really conspiracy theories. It's more like incompetence, because they can't hire new people. They're constantly hiring new people, and it's incompetence. And I said, you know what? In my mind, I'm thinking that's criminal incompetence, and a lot of times they converge. Criminality and incompetence converge in many respects. Speaking of incompetence, it's so nice to have a prime minister who has an Oxford degree, but we don't get a budget.
There's no budget.
There's no budget. Former Bank of Canada governor, now prime minister, can't get a budget. I mean, and this guy should be able to do it on his own.
He's a
he
central
seems
banker.
to be wants to do everything on his own, and now he's writing executive orders, which we don't even have in Canada. But where's the budget? How can you not have a budget? I thought you were the smartest person in the room. Where's our budget, Jerry?
We have to take care of it ourselves, Jeremy.
I think
this is the bottom line.
I think what you were talking about in terms of the issues that this financialization has done and hollowing out the middle class, and the fact that you're supposed to be happy with your 6% returns when it's coming at an expense from another angle, you don't even realize that when you look back to the Freedom Convoy and blocking bank accounts and such, if your funds are not in the bank, they can't get away with this.
They can't hold it. It's undigitizing your wealth when you convert out, and you protect your wealth by holding physical assets outside of a, fiat financial system, an unbacked financial system.
Yeah, and look, that
would be the solution.
And that comes at a cost. It's not free. I had a client this week. He emailed in and he said, what would the cost be? And this is always dangerous when they don't want any information. Just give me the costs. What's it cost to buy $500,000 in gold? Okay, so, the cost is $120 over spot. You figure out the math. I think it was like $3,800 or something, right? It was $7,000 plus. That's crazy. Okay, well, it's less than 4%. That's less than 4% for Royal Canadian Mint to source material, refine it to 99.9% purity, fashion it into a bar, package it, ship it to a wholesaler. The wholesaler has to insure it and store it and ship it to a retailer. And the retailer then sells it to you.
Supply and demand plus supply and demand.
Right? This isn't a piece of paper. It's an actual asset. But people sometimes get caught up in the figure of $7,000, which makes me realize if that's the focus, don't ever buy property. Because if you're buying $1 million property, you're spending $80,000 in closing costs, right? You've just paid 3% to your agent. God bless them, right? And then you're paying with the transfer tax, the lawyers, right? Why would anyone spend that extra money? Ever? Well, because you look at the long term and you say, well, what am I going to gain out of this? Mm-hmm. Well, I know that the housing property will go up over time despite soft markets, et cetera. And the fact is that if you look at gold, which just came off 5%, like there's your discount, right?
Absolutely.
If you were looking for a cheaper price in gold, you just got it. You just got it free. Mm-hmm. That $7,000 is now gone.
Yeah.
There is no cost for that because you're buying it 5% cheaper this week than last week.
Big bounce off of the 50-day moving average, by the way. Vince Lanzi talked about that. So we're up, big rally today. But back to this gentleman, it's clear that he's just in it to trade, omitting the fact that central banks and their countries around the world are not buying the paper. They're not too concerned about paying over spot price for a piece of paper. They're buying it for wealth insurance. And central banks and countries require gold reserves, as do we, for two main reasons. The first being liquidity, and the second being decoupling your wealth, decoupling your sovereignty away from crazy madness like, having no budgets.
It's just so funny, like I'm looking at a client this week. I was looking at a client bought in the market, I don't know, just a few years ago, right? They're up 130%. On $500,000, that means your account's worth over $1 million now. Mm-hmm. Believe me, they have no concerns.
Yeah.
Zero concerns.
Very subtle, calm. And for
now, I got another one for you.
Go
Very
ahead.
quick. I know we got to go to break, but the other one is clients sometimes will be upset when they start to think about registered accounts and the income tax they'll pay down the road. And I always find that a bit ironic, and I've kind of figured out how to discuss that with them, which is I say direct. I'll ask you, Jerry, would you prefer to make $500,000 a year or $100,000?
$500,000.
Are you prepared to pay over $200,000 in taxes to make that $500,000?
I'll go for it.
Or would you rather just make $100,000 and pay $35K?
Right, exactly.
Right?
Yeah.
Make the money.
It's common sense.
Make the money, and then have those problems.
And then worry about it.
And worry about those
taxation later.
Exactly.
Hopefully get the Nasera Jacera.
Yeah. The number 1-877-8-SILVER, the website, guildhallwealth.com. Those forecasts, we're talking $6,000 gold. We're talking over $100 silver. The gains could be absolutely immense if you have just a portion of your portfolio in physical precious metals. It's just going to be very exciting. And coming into this next segment, Jerry, we're going to talk about the 20-year turn and why silver could soar and the types of gains that people could be looking at. The number 1-877-8-SILVER, the website, guildhallwealth.com. You hear us chatting on the show, and we're talking about all of these different things. At the end of the day, we're trying to empower listeners with analysis of the precious metal market. We're uncovering the trends and opportunities that are often ignored by legacy media, and we aim to educate and inspire those who prioritize real wealth, measured in ounces, not in depreciating fiat currencies. We really want to foster community, so if you're listening to us on YouTube, on Rumble, please like and subscribe. We, our values are for financial resilience, independence, and freedom. And like I said, Jerry, I want to add to that political clout. We want more political clout, and to do that, as many have said in the past, and some even world leaders have recently tweeted out, he who owns the gold makes the rules.
A powerful statement.
In the world of negotiation, remember the golden rule. Mm-hmm. Let's talk about this 20-year turn. What is this 20-year turn? Talk to us about this.
So the trend is not too surprising, as we're currently transitioning from it's an 80-year socioeconomic cycle. It consists of 4 times 20-year turnings to the next. New systems are being set up for the next 80 years. We're seeing this happening right now as major nation states are stockpiling real physical resources of all kinds to enable their geopolitical sovereignty during this transition, because it's filled with obvious competition. Aren't we seeing competition right now, and political confusion? Lots of that, especially on the ground level here. Last time we saw the transition was the conclusion of World War II, and in conjunction with Bretton Woods Accord, the IMF, and the World Bank. Now, as we approach the final stages of the 4th turning that we are currently in right now, we're anticipating increased volatility, global players with a decline in globalization. We're seeing that, increased mercantilism.
Yes.
But before we can look forward to the next turning, unified, we're going to be seeing characterized by unified direction under these new systems for the next cycle. Now, a major factor in this is the transition into Basel III, the end game we talked about this July, where gold will now be classed as Tier 1 asset, on par with cash and high-quality government bonds as collateral. This further encouraging larger players, countries, to move away from the U.S. government selling the treasuries, moving away from that as collateral and moving towards gold for improved sovereignty. What is it going to look like? Well, it's clear to me. This new transition into a major nation's stockpile as they stockpile gold, silver, included in preparation. Silver is the one that we're looking at. Silver stockpiles right now empower industry, and we're seeing industrialization. The deals that happened this past week, the planes, the military, we're seeing a shift towards focus on industrializing your country again, aren't we?
Oh, and I saw another one this week, Jerry, that I forget who the post was. Someone was talking about AI. It was one of our community gold people, right? They're talking about AI. Don't forget about how much silver goes into the computer processors that are developing the AI.
Yes.
Right? AI doesn't just exist out in the ether.
It doesn't?
You actually need hardware to create that ether. And all of the silver that goes into those technologies is immense.
Yeah, it is immense. So silver stockpiles, they're empowering every single industry. including its monetary use, the remonetization of silver, industrialization of silver. Today's industrial use cases, we see solar panels, you named it, batteries, AI, as well as in military for its use in missiles. These areas are crucial to the transition phase because you're stockpiling for the industrialization. What happened in the previous fourth turning? Silver to gold ratio, back from 90 to 1 down to 20 to 1. What does that mean? If we talked about in the previous segment that gold can head anywhere from 14,000 up. Let's call it 14,000 US per ounce if we go back to a 20 to 1 ratio. We're talking about silver being at about $500 an ounce. At Guildhall, we just observe these trends. And we strongly believe that we're on track for a repeat of this, along with everybody else who's following this market soberly and not looking at fiat and over-financialization. The case with nations stockpiling silver at a record pace, 6-year structural deficits coming out of the ground. We're not getting enough. A shortage of 1 billion ounces of physical silver over the past 5 years, a bullish cup and handle pattern playing out on the silver USD chart, and the paper to physical ratio of about 400 to 1. You got 400 of those paper contracts for every 1 physical ounce. So go ahead and buy the paper.
So, Jerry, I'm going to ask you, if all of that is true, why hasn't it happened yet?
Well, we still have contracts, and the contracts represent 5,000 ounces of silver. And reminding you, this pullback that we saw this week was strictly contracts. Contracts, in my opinion, I think will be affected by Basel III rules coming into play. Certain assets like that can no longer be held or have full value on a nation's or a country's or an institution's balance sheets. And I think right now, when the balance sheets are so off-skewed, you have so much debt, so much liability, 37 trillion in debt, 100 trillion in unfunded liabilities, with 2% of that representing gold. I'm sorry, you need to do something about your assets and the balance sheets. And this is why we believe with the silver to gold ratio right now at 90 to 1, this is a huge setup. A generational bull run for silver is imminent. It's about to happen.
The number 18778-SILVER and the website guildhallwealth.com. If you want to acquire physical gold and physical silver outside the banking system, you own it directly. A great way to store wealth long term. You've heard the forecasts. Give us a call. We'll show you how to buy it direct, how to store it physically for ease of liquidity, or to even hold it as part of your retirement fund, part of your retirement portfolio for the long term. The number 18778-SILVER and the website guildhallwealth.com. Jerry, great to see at auction a record breaker this week. Do you want to tell us a little bit about this diamond?
What an important diamond, Jeremy. It's called the Mediterranean Blue. It's a 10.3 carat fancy, vivid blue diamond. It went up for auction in Geneva, Sotheby's auction on Tuesday. It was not just the top lot of the sale, but it was the marquee item during the series of jewelry being auctioned off. And it was an amazing show. The diamond sold within 3 minutes.
Wow.
Record 2.5 million. American private investor came out. The final hammer price came down. There was 2 bidders, and he went to town. $21.5 million. The estimate was $20 million, and there was an applause after that auction. So it was quite the show. And this just comes a week after the Golconda Blue was sold, and then after it was put up to auction, a family member came in to say, "Hey, what are you doing? I'll buy it." So it's just showing a move away from financialization back into resources and hard assets, a way to diversify away from fiat depreciating currencies.
Yeah, colored diamonds have always been quality, rare assets. You know, to mine one is literally 1 in a million out of white diamonds, but to get to investment grade, you're talking about 0.1% of diamonds being investment grade colored diamonds. And at Guildhall, we've always focused on the highest clarities, strongest color combinations, and we always went out, bought the diamond ourselves, and then allowed clients to partake as part of that collection. I wanted to bring a couple diamonds that I thought kind of matched in terms of collectability, not just investment, but real collector items for someone to think about. We have a 0.72 fancy, vivid, purplish pink of Argyle descent. It was a recut. It was originally an emerald, and they recut the diamond. But it is from the Argyle mine, which, remember, closed in 2020. The mines are not being developed anymore. There's very little investment in the mines. And by the way, did you hear that De Beers is shutting down its synthetic, well, I don't want to call it synthetic, but it's lab-grown diamond business? Just goes to show you that they blew themselves out. The lab-grown diamonds market blew itself out, overproducing, and now they're not worth anything.
Cheap
and you
doesn't
can't
last.
Yeah, you want to stick with something that's quality. And I think the whole luxury market is having that sort of identity crisis of how do we improve what luxury really means. And so something like this, you are just not going to find it. Now, understand this is literally $1 million diamond, a 0.72 fancy, vivid, purplish pink. You are not going to find it again. And that one is it's going to be about $1 million. Now, I have another collector item. Not all collector things have to be in the millions of dollars. This is one of my favorite diamonds we've ever had. I am brokering this right now. It is a 1.43 fancy intense yellow, internally flawless emerald cut.
Beautiful.
You don't see emerald cuts. You see lots of radiance. You see lots of cushion cuts. You see some ovals, but you never see emerald cuts in this type. And it's a decent size.
Look at just under the 1.5, so you get the size without the price premium. That's really. Tell me more about that one.
Well, this one is, you're looking at close to 50,000, but that's something that you are going to have generationally. I mean, I think that would be a really beautiful asset to have as an engagement ring for the right buyer, because I think that that's something you truly want to have for generations to come. And it's going to be something that's always going to be of value, and it's only going to increase in value, and it's not going to get any easier to find. So it's one of the most beautiful diamonds I think we've ever had here, and
beautiful.
It's reasonable.
I think
what
so.
It is. You can't find it.
Beautiful diamond, verifiable origin. I mean, this is what it's about. It's about wealth preservation. It's a finite resources with enduring wealth, and retaining one of these stones means securing a tangible, appreciating asset that can be passed down privately, providing beauty, financial security for generations.
And portable, right? And private, right? Outside the banking system. No worries about, are they going to confiscate gold or any of these things. It's just privately held wealth.
100%. Now, Guildhall, we offer the most finest fancy color diamonds. We offer a rare, low correlation that appreciates or holds value during crises. We've been doing this since 2002. So you want to get in touch and find out why this is a safe haven investment opportunity. You want to get in touch, request the investment guide, the investment kit, or contact us. Give us a call, 1-877-78-SILVER, to book your own. Come on in. Our diamond discovery session will educate you on how we can help you add a natural fancy color diamond to your portfolio.
Well, we hope you've enjoyed the show, Jerry. I know I've enjoyed the discussion. You brought some great stuff this week. I'm really excited to hear these forecasts that have been happening. If you just tuned in, feel free to check us out on YouTube and on Rumble, or check us out on Spotify. As always, like and subscribe. You know the deal. And, of course, follow us on X. It's been a blast. I can't wait for next week. Thank you so much. Get your buyer's guide. Learn how to acquire physical gold and silver in a registered account, or directly the number 1-877-8-SILVER, the website, guildhallwealth.com, and we'll all speak to you next week here on The Real Money Show on 640 Toronto.